Hello everyone, I'm Sahil and welcome back to the channel. In this episode, I will be sharing with you guys my personal stock portfolio as I promised in the last video. This is gonna be the first time, so let's hit it up. Shit, it's not working. Oh yeah, I forgot to tell you guys that at the end of November, Mr. Sahil has finally crossed the 100k mark in net worth. Woohoo! Actually, I'm not all that excited. 100k was never a milestone for me. Maybe it is. But in terms of subscribers though, so go hit it up. Okay, so to track everything, I use the Yahoo Finance app, and to log everything, I have my own spreadsheet as well. The Google spreadsheet has one problem though, that it doesn't support Singapore stocks, and I have to manually update the prices whenever I want them to be updated. I usually do it once in a month. However, if I'm buying a shares or any changes in the numbers of shares, I update that immediately. So if in the future you would like to see the changes in my portfolio up to date, then you can definitely go check out my Google spreadsheet, and I will leave the link below in the description of this video. If not, let's see all the stocks that I have. As you guys can see here, I have my portfolio split up into different sectors. So this is exactly how I diversify my portfolio for now, since I only have one asset class. Maybe in the future when my wealth is a bit bigger, I would also go and diversify into different asset class. Okay, so now let's look into the first sector, which is the industrials. In industrials, I have two companies. Firstly, ST Engineering. ST Engineering is the company that I'm currently interning for, and they are a massive blue chip company with strong ties with the Singapore government. Their business is divided into four segments. Firstly, aerospace, marine, land systems, and electronics. And within these segments, they serve two types of customers. First is the government, and they cover anything from defense to public buses. And then the second one is the commercial businesses. I don't have much invested into this company at the moment, but I would love to add to my position as the opportunity arises. So the cost to me for the 600 shares that I currently own was 1950, and it has now appreciated to 2300 something. The second company is KPABM Holdings. This company provides structural engineering works and is based in Hong Kong. Their main customer is also the Hong Kong government, and they are currently working on projects like the noise barrier for the expressway and the roofing of the airport. It's a very small company with a market cap of around 20 million USD, and small cap companies come with their own risks. So I'm not looking to put more money into this company. I just found it at a value, and I see it as a cash cow for now with a high dividend yield, which is pretty much safe. The next sector I have is financial services. In this sector, I hold the three major banks of Singapore. Singapore is a regional financial hub and somewhat of a tax haven with very low taxes. Dividends don't even get taxed here, and the country itself is very stable. What that does is it attracts a lot of rich people and companies, which is great for these banks. Also, the Monetary Authority of Singapore exercise a tight control over these banks and make sure that they don't fuck up, which makes my investment very safe. And with the recent downturn, I was able to pick them up at very high yield. The government actually capped the dividend this year, but I'm hoping that by the next year they will go back to normal. And one more thing to take note is that there's digital banks coming up, which is something of a concern, but I think the banks are still safe, and I will talk about it sometime in the future. Next is the consumer defensive with the BNS International. This company's business is divided into two segments, retail and distribution. Under the retail business, they operate the biggest bubble tea chain in Hong Kong, the Tenren Tea franchise. And for the distribution business, they are the exclusive distributor for some sweets, candies, eggs, condiments, and other food-related brands. This company has really suffered from the Hong Kong protest and then the coronavirus. I started investing in it before the protest started, so my first tranche was at 90 cents a share, and this company seriously got trashed. At one point of time, the stock price was as low as 31 cents a share. but I believe the company and the management is great, and I am confident, so I kept on averaging down. So my current average price is 44 cents a share. The next sector is everybody's favorite, the technology sector. Here I have a Singapore-based company with operations overseas as well. AM tests semiconductor chips and is specialized in the high-density ones. They also sell test equipment, and this company is my play into 5G and autonomous driving. All the systems that go into these tech require high-density chips, and they need to be reliable, hence testing is absolutely necessary. This company have seen some insane growth in past 1 year and went from $1.37 to $4.18. My average price into this company was $3.44, and I'm looking to buy more if the price drops around $3.30. Next I have is the basic material sector. In this sector I have Nippon Carbon Co., which is a Japan-based B2B business. This company provides carbon products which are mainly used in high temperature furnaces, the furnaces that are used to extract iron from iron ore. This is a value play for me, and I'm looking at the industry's recovery while collecting the dividend. Next is the energy sector, and you guys will be like, what? You can't be on YouTube if you don't invest in Tesla, but in energy instead? Well, this is what it is, and I'm sorry if you're offended. AG Energy Holdings is a natural gas exploration and production company with operations in China. I have this company for a short term, which is like 5 years, and I completely understand that natural gas is not a future, but it's very much a transitional fuel. Right now, coal makes the bulk of China's energy mix, and they will not directly change to renewable energy. They have to go through natural gas, which is a lot more cheaper option and burns way more cleaner than coal. The Chinese government is really pushing for natural gas, and the current demand in China can't even meet the supply. Hence, they heavily rely on imports. But China being China, they are investing a lot of money into developing the home production, and yeah, this again is a cash cow for me with high dividend yield. Lastly, we have is the utility sector with my favorite company, the China Water Affairs Group. Their main business is to supply tap water, which is very safe, right? Yes, it's extremely safe. But to me, this is a growth company as well, and I'm expecting like 5 to 8 times returns in the next 10 to 15 years, which is not as good as Tesla, but with the safety that it provides me, I'm just loading it up. Okay, so that's all the companies, and my total cost was 51,000. The portfolio currently stands at 53,200 something, and that's a gain of about 4.5%. But that doesn't really mean anything to me because I'm not going to sell, and these are just unrealized profits. What really means something to me is the dividends I receive. So for the next year, I'm projecting $2,557 in dividends, and that's dividend yield on cost of roughly 5%. And yeah, I hope that this dividend one day can exceed my total expenses, and that would be the day that I would be financially free and I don't have to actively work. Below here I have like these few pie charts that tells me how diversified I am, and yeah, basically that's it. And then we have this next tab where I account for all the dividends that I've received. It's just $600 because at the start of this year I had only like $30,000 invested, and I have made the bulk of my investments in past 4 to 5 months. Also, you see negative numbers for some months because a broker that I use have custodian fee, and I just use my dividends to offset that. So some of the months where I don't have dividends, it comes out to be a negative number. Yeah, so that's about it. If anytime you want to go and see my portfolio, you can just follow the link in the description below again. Like always, if you're interested, just subscribe and stay tuned until the next video. Ciao.